U.S. futures pointing to a higher open on Tuesday, with European shares up 0.2% as investors remain optimistic that the European Central Bank would take necessary steps to prevent the collapse of the euro. Treasuries decline for the second day before U.S. debt auctions, while gold is on the rise. Earnings out today from Walt Disney and Express Scripts. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. So stocks closed off their 3-month highs for the second day in a row on Monday, really holding on to those gains since last week. It seems as though people might want to be fading this rally, but instead they really should be trading it.
Yeah, I don't understand why everyone on TV now is talking about how equities are dead, that the stocks aren't the place to be. They talk about everything that's wrong with the world, but they're not looking at anything that's actually making you money. And lately, with the markets closing about 2% off the highs of the year and continuing the uptrend that was even put in place on October 4th, over a year or so ago, I think the market's acting very well. Those with a macro plan are making money. Those that are using stock selection, intermediate trend, tracking are doing well. So I think there's a lot more to like than to dislike.
And we're seeing participation from not just the leaders, but the laggards. But let's start with the leaders. High beta tech seems to be leading the way.
Yes. Apple, 25-point move since last week, also up 40 since the earnings. Google acting much better. Amazon acting decent since earnings, has nice news today. Even Baidu, had a big move after earnings. And then you talk about some of the laggards. There are laggards that have been coming off the lows in the third quarter, like the refiners, like some of the ags that not only had a dead cat bounce, but have had continuation. So all in all, the charts have been working very well, and people that have been trading the rally versus fading the rally are having, much more success.
It seems like there's a lot to like in this environment. So why is everyone fighting it?
You know what? I think that the media is just making everyone loves to be negative. Everyone loves to be the smartest guy in the room on how you're going to call the next debacle. But if you look at the chart of the S&P, you will see, like I said, ever since that October low, we've had a nice move to the upside. First one peaked out here in early April. Then you had about a 50% pull-in from that area. Then we've been methodically working higher, making higher lows. Then we finally broke this downtrend right there. If you take a closer look here, you will see, we broke above this area, above that 1375. That was on Friday. Right now we're a little extended from the 8-day, a little extended from the 21-day. If you also want to draw this channel, the top end, we just started to touch the high end. So every time we touch the high end, we come off a little bit. But all in all, trading this rally, holding multiple positions versus trying to short every time the market moves up or every time you see a slight pull and say it's over, it's just getting frustrating for those type of guys.
Let's talk about Apple really quick. Broke that key resistance of 620, went as high as 624 yesterday. Where's resistance and support for Apple right now?
Well, let's take a quick look at the chart. I got long Apple last Thursday, right around here, when it started to base and hold higher. I actually missed this 580 point, which a lot of guys made good money on. And then yesterday, it broke above this 620. Next real level here is the all-time highs of 644. It's on its way. I would just trade around your position based on the chart pattern, but hold Apple if you're a macro investor.
All right, we're going to dive into all of this and more in the long version, so stay with us.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.